Hey, what's going on, guys? Today is March 12th, and in the next 3 minutes, we're going to see the CPI data report being released. So as of right now, the NASDAQ market is up 1% during the pre-market session. For those that do not know, the CPI data report gets released on a monthly basis. It's an inflation report that lets us know, again, if inflation is going up or down. Right now, the Federal Reserve has a 2% target. Inflation did come down from 9.1% at the peak, which was a 40-year high. Bottomed at around like 2.7, 2.4, something like that. And then began to pick back up and currently at 3%. So the market's consensus or the market's expectation for today's CPI data report in the next 2 minutes is that overall CPI will come in at 2.9% and core CPI is expected to be 3.2%. We're going to break it down. It gets released on this website called bls.gov/CPI. And then this will be updated. It will say in February, right? Because the month has to complete itself and then it gets released. I'll pull it up and then that will give us a breakdown on what the report is. I want to remind you that the market reacts instantly. I don't like to trade before the report comes out. I like to trade the reaction after if I see an opportunity present itself. This is a very volatile time, and if you cannot tolerate that type of volatility, then again, do not open yourself to a position in which you cannot tolerate. Very simple. And I appreciate you guys. Whoa, there's a few of you in here. Yeah, thank you guys for tuning on in. I do feel a little bit better than what I did yesterday. I think obviously the sleep helped in getting some rest. So thank you again for the support on yesterday's video. I'm sure you can hear from maybe my voice and yeah, I'm just a little under the weather. My daughter got sick and then obviously it got passed down to me. So the short goat. Oh, that's terrible. But I'll take it. So yeah, NASDAQ market, we'll see the way that it reacts. What's up? Yep. So I never like to try to predict how the market's going to react based off of what is going to get reported. I do not know what's going to get released, and I do not know how the market's going to react. So I always just like to play it safe, stay cash, wait for the market to react, and then choose to take action. Here it goes. NASDAQ market reacting in a positive way. Big push up. This is huge. As long as it holds up here, right? There can be a lot of fake outs. All right. Looks good. Here we go. Let's see what it came in at. We came in at 3.1% for core CPI and 2.8% for overall CPI. That is much lower than what was expected. It's a little. Here we go. Now it says in February. Let me go ahead and pull it up very quickly. All right, NASDAQ market still popping off. As you can see, market is liking that CPI report, at least for now. Remember, there are many times that the market can react like this pre-market, and then by the time the market opens, people begin to sell and take profits. Again, we do not know the way that it's going to continue to trade, especially recently as market's been incredibly volatile. Yeah, so CPI is actually cold AF. Yeah. It looks like it. So let's go ahead and break this down. Is that cool with you guys? Can I break down this report or you guys don't need me to? Do you guys know how to read this report? What do you guys think? Let me know in the live chat. Oh, showing slight signs of a resistance. Be careful for those that bought in at those high levels. Watch for a quick change of direction. Break it down. Yep. If it's not too much to ask, all I literally ask you to do is make sure you drop a thumbs up. And if you want to partake in the live chat, you do have to be subscribed to the channel. You guys crack me up. I don't know how to read. All right. Let's go ahead and do it. Sweet. So CPI report was just released. And again, I want to make sure that you guys always understand where you can get this report yourself. So, oh, this isn't it. I need to say, yeah, February 2025, released March 12, 2025. There we go. Okay. So the first part that I like to focus on is I mean, there's just these little paragraphs that try to summarize it. They make it kind of complicated in the way that they break it down. They say that the CPI report for all urban consumers increased by 0.2% on seasonal adjustment. So a 0.2% increase, if we look at the expectation, we were expecting a 0.3% increase. So that does make sense. It was expected to, jump up 0.3%. It only jumped up 0.2%. So because of that, again, inflation came in lower than what was expected. It says after all adjustments, inflation for the past 12 months increased 2.8%. Do you see that? 2.8% is where our overall CPI is currently at. And then they calculate core CPI. So core CPI is all items less food and energy. So the index for all items less food and energy rose 0.2%. That's pretty big because, again, the market's consensus was that core CPI was going to be 0.3% of an increase versus our last one of 0.4%, but we came in at 0.2%. So again, core CPI only increased 0.2%. So again, we were at 3.2%. Now, if I'm not mistaken, we came in at 3.1% based off of how core CPI is calculated. So then it should tell us here all items in the last 12 months, 2.8%. After rising 3%, that was back in January. And then all items less food and energy, that's core CPI, came in at 3.1%. And that's, again, in comparison to the last 12 months. So this is kind of like where it just shows you, okay, all items in February increased 0.2%. So the way that this is calculated is they added the new month of February and they take away the old one. The old month of February is a 0.4% increase. The new month is whatever was just added. What was just added was a 2.2% increase. So again, you take away the old, you add the new, and then they add these all together. There's actually an exact formula. They don't just actually add it. I don't know how to calculate the exact formula myself, but I know that it is available online if you want to learn a little bit more about it, because it's not just adding up the sum of all the numbers. There is a formula behind it to take beyond the 12 months into consideration. But with that being said, it's just a general understanding that these are the last 12 months that are factored into our CPI data report. So if you ever ask the question of like, hey, why do people say that inflation is only at 2.8%, but I'm paying a lot more now than what I was 5 years ago? Because you are, right? This is just taking into consideration really the last 12 months, right? And I think that's really important to take into consideration, because this is where people get bothered, or people say that the CPI data report isn't the true measure of inflation. It's how the Federal Reserve looks at our data. It's how, again, a lot of analysts pay attention to our inflation report, but it doesn't take into consideration of, what we paid 5 years ago to what we pay now, or what we paid even, 3 years ago to what we pay now. It is obvious that yes, we most likely do pay a lot more, for groceries. We do pay a lot more maybe for rent now than what we did 3 years ago. But again, this formula, this report only really measures the last 12 months. This is something that I want you to take into consideration, okay? With that being said, then we go into the dotted, the line graphs. So the blue is all items. The kind of like purplish burgundy is core CPI. So it's showing that overall CPI went down, right? Went down from 3% to 2.8. And then core CPI went from, 3.3% down to 3.1%. So those were the adjustments. So if someone were to ask you, right, be like, hey, Timothy, how did the report come out today for inflation? You could be like, okay, well, overall inflation came down from 3% down to 2.8%, and core CPI, which is all items less food and energy, went from 3.3% to 3.1%, showing that inflation is cooling down. My concern, right, we talked about it last time. It's not a concern right now, but my concern with inflation is in the months of May and June. Last year in 2024, there was no increase, right? So just expect that as long as inflation continues to stay around 0.2 to 0.4, which has been the median or the average for the past few months, as long as we continue to add that, be aware that inflation should naturally begin to go up in the months of May and the months of June of this year, because again, we have nothing to take away. This isn't incorporated into our formula because last year there was no change in those months, which was great for last year, but now 12 months later, it's not the best because now we're going to be adding whatever measure of inflation was tracked for that given month. I hope that makes sense. And then this is the fun part. This is just like the line items that is tracked for the actual inflation rate. So when asked the question of like, what is tracked when it comes down to the, why is inflation going up or down? These are the line items that are tracked on a monthly basis. So again, next month, they're going to have a new line for March, and then the month after that, and then the month after that, right? And then they just go down the list and be like, hey, is food increasing or decreasing in the month of February? Okay, is food at home increasing or decreasing in the month of February? And then they go down the list from food to energy, to all commodities, to new vehicles, used vehicles, apparel, medical care commodities, shelter, transportation, medical care services. And then that's how you get the overall core CPI down here or overall CPI up here. So for those that do not know, again, I'm just re-explaining it for those that are tuning on in for the first time. You keep hearing me talk about overall CPI and core CPI. Overall CPI includes all items. Core CPI includes all items less food and energy. So it's just this sector right here. It doesn't include energy and it doesn't include food. The reason that they don't include that is the Federal Reserve understands that they have no influence on the way that these prices are, the thing that the Federal Reserve can do is they can raise interest rates, they can cut interest rates, and most likely based off of that, they can influence this form of inflation. Not really so much when it comes down to energy, and not really so much when it comes down to food, right? And because of that, they have then core CPI, which is all items less food and energy, and then overall CPI. So we could see, let me zoom in or make sure that you could see it properly. Here we go. So for the month of February, we saw a 0.2% increase. And right here for food, we saw a 0.2% increase. Food at home, we saw no change. Food away from home saw a 0.4% increase. Energy saw a 0.2% increase. And then energy commodities saw a decrease of 0.9%. Gasoline, a decrease of negative 1%. And then here we have fuel oil, saw an increase of 0.8%. And then here for energy services, we saw an increase of 1.4%, electricity 1%, utility gas pipe services 2.5%. So that's the biggest increase that we've seen, 2.5% so far. Okay, and the biggest decrease is a negative 1% decrease, and that's under gasoline. Then we go into the core CPI section. So these increased by 0.2%. We have commodities this is new vehicles, saw a decrease of 0.1%. Used cars and trucks saw an increase of 0.9%. We have, apparel, saw an increase of 0.6%. Medical care commodities saw an increase of 0.1%. Services, less energy services, again, 0.3%. We have shelter, 0.3% increase. A decrease of 0.8% under transportation services, and then an increase of 0.3% in medical care services. So again, all that we are doing with this list, not that we are doing it, it's this group of Bureau of Labor Statistics. They're looking at this, collecting all the data, and asking the question, for next month, in the month of March, for new vehicles. From February to March, did we see an increase or decrease? And by how much? 0.5%? Okay, 0.5. And then they go down the list through every line item, and that's how they come up with it, okay? So, that's pretty much it when it comes down to this CPI report. Let's see if markets are still holding. Surprise, surprise, markets are pulling back slightly. Not too surprised by that. Markets were already anticipating a lower rate of inflation. So we'll see if they continue to hold up here or if the market ends up turning around for no given reason. I want to remind you, there's a lot of hope. And please, you're an adult. I'm not going to try to be here to convince you to do otherwise. There's a lot of hope that the market has bottomed out. You can form your own decision. In my opinion, The trade war concerns are still very much present. If you ask yourself the question, hey, what's been causing the market to sell off? It's been the trade war, right? It's been Trump trying to negotiate with different countries and trying to threaten different tariffs, right? And now this is not just happening with the US and other countries. Now other countries are doing it to other countries as well. That being said, if this continues, then we cannot expect that markets will just naturally begin to recover. We need to understand that if that factor is still affecting market conditions, we will most likely still experience some form of volatility and more fear being injected into the market, especially if new tariffs are being presented. I'm not saying that new tariffs have to be presented. I'm just saying that it seems like he's just getting started. Again, you make your own decision. If you think that this is the bottom, if you want to buy aggressively, because you think that this is going to be a huge dip buy opportunity, be my guest, right? You buy whatever you see to be fit. I just want you to be aware, not just on the fundamental side, right? Understanding that, what was causing so much selling pressure, but even on the technical side, markets are still bearish. A slight uptick can just simply be a lower high. I myself am not convinced that markets will just naturally begin to recover for no given reason when conditions are still the same. Don't get me wrong, today is a good day. Inflation did come in lower than what was expected. That is a positive catalyst, which can create a slight uptick. But again, a lower rate of inflation isn't going to fight off the fear that might come with tariffs once they're presented. And that's just what I'm here to remind you. It's good to understand what is happening today, but it's also important to understand the bigger picture, the kind of macroeconomics of what is impacting the stock market right now, and asking yourself, is it done? And if it's not, then you can't expect the selling pressure to just naturally stop. Okay? So I'm excited to follow up. I'm excited to see if markets do continue to recover. Then in that case, during today's live trading session, I can consider going long. But if markets begin to show signs of a resistance and begin to retrace, and believe me, again, we've seen this before. I don't want to hear any excuse of, what the heck, this was a bull trap. I had no idea that markets were going to pump and then dump. Remember, market sentiment as of now is still bearish. So it's nice to see a pump, but it can be short-lived. So if you buy at the highs and all you're really doing is buying at a resistance of a descending setup because we still know that the overall sentiment is bearish, then you simply put yourself in a hopeful position where you were aware that things were bearish, but you still decided to buy at high levels, hoping for something to happen that hasn't actually proved itself. Again, there's nothing wrong with buying the dip if you truly do believe that this is the bottom. You're an adult, you can do whatever it is that you want. I just don't want you to make an impulsive or aggressive decision not taking the bigger picture into consideration. So I wish you nothing but the best. And for my LPP team, I'll see you in the next 45 minutes for our live trading session. So again, I trade live with them every single morning. They get to see all of my good trades, all of my bad trades. Like yesterday, they got to see me short Tesla as it pumped, became overbought, and then dumped right back down to pre-market support. So if you want to see me go long, go short, again, the second link in the description down below, you can join LPP and it breaks down to $1.35 per day is with the current sale that we have going on. It's a one-time payment, lifetime access. And again, it's the second link in the description down below. If you sign up today and sign up right now and you want to watch me trade live in the next 45 minutes, when you sign up, watch the welcome section of the lesson library to get access to the LPP Discord and to learn how to watch me trade live. But please make sure that if you sign up to watch me trade live today, watch that welcome section so you know exactly what to watch or what to get access to so you can watch me. Okay. So I appreciate you guys taking time out of your Wednesday to tune on into today's CPI data report. Remember, overall CPI came in at 2.8%. Core CPI came in at 3.1%, which are both lower than what was expected. Market is reacting as of right now in a positive way. We'll see if that bullish sentiment continues. Again, I appreciate your time. Hope that earned a thumbs up. Please consider subscribing. And like always, let's make sure that we end the year on a green note. Take care, team.